Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I am not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, I want to talk a little bit more of GameStop stock with you guys, recap the video that I just made, highlighting some reasons why I think GameStop is interested in acquiring Target or potentially Macy's as a backup. Give a little bit more context and maybe some data for some of those high level talking points, as well as a couple more tea leaves that have come up since then. And what's the and? Oh, maybe highlight a couple top comments or questions that happened within the comment section on that video and just hang out with you guys as well. I don't want to keep talking about Target forever and ever, so I'm going to try to make this live stream kind of like, hey, let's flush out a couple more last thoughts, etc. Also in the chat, if you have more thoughts, etc. Would love to hear them, of course. What's up, Ryan? Glad you're here. Thanks, by the way, everyone, for the likes, the subscribes, those who have joined the channel as fans and friends. Right. I appreciate that a lot. All the earnings do go to DRS Book GME shares. And if you learn anything from this, I appreciate you writing along. We're at 2,910 subscribers. We're about to cross 3,000. I mean, maybe not about to. It might be 10 years before I cross 3,000, but we're closer than we were a year ago to 3,000. So let me start off with a recap. What's up, guys? Brick and Mortar. Man, what a name. What a name to be someone who's interested in GameStop and your handle is Brick and Mortar. I mean, that's just respect for that. Ryan Cohen probably wanted that handle and you already took it. You took it already. What's up, Patrick? Brick and Mortar asks if the merger has already taken place. No, I don't think it's literally already taken place. We'll know if it takes place, but I don't think those articles would have come out if the handshake under the table agreement hadn't already been agreed to. Now it's just getting into the material level, the material portion of those discussions. And by the way, one of the comments, several were talking about would this even be possible? What are the implications for GameStop and Target, etc.? So we can talk about that as well. Mr. Lucky says, perfect timing. Thanks for your consistent, insightful viewpoints on GME. I appreciate it. Thanks. By the way, well, let me start with a recap. Okay, so the gist of that video was, well, GameStop's interested in acquiring something. Ryan Cohen has been public about some of the criteria that he's looking for. I've done a lot of homework off camera, sorting through a bunch of companies that meet this criteria. The companies that I think meet it the most are Target and Macy's. These are some of the criteria. These aren't all of them. But the reason I said, hey, Target seems to meet it better to me are several in nature, from the valuation to the opportunity to turn the company around quickly through efficiency, quickly through the similar path to Berkshire Hathaway, as in the quicker utilization of NOLs, the historical / tea leaves of Ryan Cohen's history of investing into dying companies that Mark Tritton is involved in leadership of, the tea leaf of the GameStop head of social media posting a meme saying, what's the target? And then laughter, aka maybe Target's the target. The tea leaf of Roaring Kitty having a target in his infamous emoji timeline. The note that, and I apologize for anyone who took my rambling. I woke up at 5 a.m. to record this, so a little bit of brain fog. I apologize. Apparently, I still have some brain fog. I apologize if anything came across as like my personal political views or political debate. But another reason that I mentioned why I think Cohen might be more interested in Target is that Cohen has made multiple public statements in personal opposition to DEI initiatives and tied that with his opinion that that creates opportunities in financial markets. Target being historically notoriously a liberal company, could Cohen view that as an easy way to not turn Target into a conservative company, but to take the politics out of the way that Target operates and to try to operate the business from a business first perspective, from a shareholder value perspective, and let the other things fall into place from there, compared to a Macy's or a Kohl's, right, which are not nearly as politically divisive. What else, as far as why I thought Target made more sense? One big one was just Cohen's emphasis on it being very, very big. Target obviously is much bigger than Macy's, almost 10 times bigger from a market cap perspective, 5 times bigger from a revenue perspective. He also talked, so that's a big one. And then the emphasis of the profitability coming quickly. So Macy's and several of the companies that people have mentioned require a lot of things to happen. And if it requires a lot of things to happen, it wouldn't be quick, right? Um, so, for example, with Macy's, Macy's has Target, and what if they do? What if he wants Macy's and he goes store within a store, and he has several kind of different portions within the store. He's got the Barnes and Noble corner. He's got the auto parts corner. Like he's got the Bed Bath corner. Like the thing is, in his literally 5 years of running GameStop, how many stores has he retrofitted? Literally, like maybe zero. Like they haven't remodeled anything. His expertise is operational efficiency and customer stickiness, right? To delight customers at least enough to where they keep coming back, right? To where he can maybe even close a few stores, right? Cutting costs, operating more efficiently, firing overpaid executives, getting the shareholder aligned with the leadership and the leadership aligned with shareholders, right? So is his expertise in creating a mall within a store of all these different legacy brick and mortar brands that failed independently? That's not what he's done before. What he's done before is take a brand that's pretty close to doing well. In GameStop's case, it was actually pretty far from doing well, but he hasn't changed GameStop's model. All he's done is cut a ton of costs in stores, improve the online experience, and voila, you finally have a retailer that's making pretty healthy money. So, do I think he's going to have this master plan that scoops up a ton of companies? If this companies he's scooping up, he's doing so for the purpose of capturing NOLs and short interest, then sure, he definitely could. But my opinion was that he was looking for something quicker. His expertise is related to cost cutting. He talked about how the things that they bring to the table are efficiency and capital, not like revolutionizing what the business has already done. So those are some reasons why I felt like Target is more likely than Macy's, but I do think Macy's is very viable. He also said eventually we could move on to the next one. So that's why I don't think he's trying to do a 10-in-1. Let me fix every brick and mortar that's dying. And in this masterclass event, like I think he's going to buy one company and fix it quickly and then go buy another company. I also talked about the sleepy management team piece, how Target has been sleepier than Macy's, in my opinion. And Of course, that phrase of if it's genius if it works, if it doesn't, it's totally, totally foolish. You could say that no matter what. So it's not a huge deal. But those are some reasons why I felt like, hey, Target is the target. So I wanted to recap that. And hey, I posted that video at something like probably 6, 7 a.m. on February 2nd. And Target is up almost $10 a share. Target's up 9% since this dropped. It doesn't mean I'm right, but it's pretty interesting. It's pretty interesting. And Macy's up pretty well. I mean, a lot of XRT is up, but Target is up more than most. So, anyways, some opportunity. Let me dive into the comments of the chat. Say what's up to some of you guys, and then I'll add a few more thoughts, a few more irons to the fire. Brick and Mortar says maybe RC did get this handle. Hey, are you Ryan Cullen? Could be. What's up? I like the stock. What's up, Don Wego? What's up, John Chess? Great to see you guys. Simple Rick. Patrick says, what about blackout period and insider buys? Could they have bought if a deal was in gentleman's handshake mode? Yes, they totally could. GameStop has been very public. Sorry, I keep leaving it on that other YouTube video. GameStop's been very public that they're interested in making a purchase, right? That they're interested in acquiring companies. It's been in every single 10Q for a while now. So it's public that they are trying to buy something. So they can totally be putting feelers out there with other people on, hey, what what do you think about selling to us? And yeah, I think that sounds pretty good. Right? Like, as long as it doesn't become we're signing documents, like something's imminent. And as it relates to a publicly traded security, it doesn't take so long for like that process to become material and then finish. Like, compared to if they were buying a private company, it's almost, I mean, the articles say that he's going for a public company, but it's almost definite that he is going for a public company because of those insider buys. With a private company, it takes so much more time to figure out what's the fair valuation that we're going to put on this company. Whereas public companies are publicly traded. You see the market cap, you know what they're worth. So that's a huge hurdle. Also, you can buy the shares, right? You can hostile take over the thing. Like you can just buy it if you want to. You don't need permission from Target to start buying Target if you wanted to go about it that way. But that's not how they would go about it, because when you're buying a public company, the sellers want equity. Private companies are looking for an exit. They want cash. If you're buying a wonderful startup, then you're going to have to pay cash for the founder that wants cash, right? The founders of YouTube sold it to Google for $1 billion. Google just reported earnings an hour ago, and YouTube's doing $60 billion. So, sucks to suck. When you buy a private company, you pay cash. When you buy a public company, the shareholders get an equity stake in the new holding company. It's like a merger, right? It's not just here's some cash, unless it is going bankrupt. Like Google bought Fitbit, which was a publicly traded company, and they scooped up Fitbit at Fit, a little premium to Fitbit's market cap, but Fitbit was going bankrupt. Like they had no viability. Like if Google hadn't had bought them, they would have eventually had to go bankrupt, which Google could have waited for, but Google's like, we want the asset now, we want the data now. We're trying to scale our wearables now. And Fitbit might be able to drag this thing out for 5 years, right? It might be 5 years before Fitbit finally goes bankrupt. Let's just go ahead and pay them a couple $100 million and let's get this thing, because we're actually going to do something with it, right? That's not the situation that Target or Macy's is in. So the shareholders of Target, the shareholders of Macy's, are not going to be interested in like, oh, guess what? It's 113 a share. Well, you're just going to get paid in cash, 120 a share, a little bit of premium. There you go. Like if you're a shareholder in this company, it's because you believe in the long-term prospects of the company. So for your owners, which are the shareholders, to sell out for, oh, here's another 10%, it just doesn't line up, right? What happens is, what's your market cap? What's your market cap? So in the new ticker, what percent, how many shares are your shareholders going to get for every one share that they hold right now? How many shares are all of your shareholders going to get for every one share that they hold right now? All of Target's leadership gets out of the way. GameStop gets to run the thing in the future, right? It becomes GameStop's company. That's why GameStop's called the acquirer. It's not because they're paying cash. It's because they are the one retaining the future leadership. But shareholders are retaining upside through equity. I don't know. This was a long rant that I should have taken some time before I dove into. But yes, with a publicly traded company, absolutely, they could have been having discussions. It's just like, it's the same thing with whatever. In athletics, there's like this tampering period, and you're not allowed to talk to a player on another college football team until after this season's over, and then yada yada. But everyone knows, everyone does it. Like it's not, there's no, it would be crazy. Let's put it this way. Let's say there's some receiver that plays for Colorado, the Buffaloes, and the day after the season, guess what? They're signing with the LSU Tigers, and they're going to go play with LSU, and they already know what they're getting paid through NIL. It would be crazy for you to be like, nope, actually, that's impossible, because they had this tampering period. So like he's lying. He's not actually going to transfer. They can't even start talking until right now. Right? Same thing with pros and free agency periods, etc. Like everyone in every business, like as long as we're just talking and it's not in writing, it's not material. But guess what? When you're talking to the guy in charge that makes decisions, it's material, right? But it's not material because you've already told everyone that you're going to be talking to people, first of all. And secondly, it's not in writing. So you haven't actually proceeded with anything. But yes, under the table handshake, absolutely could. Like there's nothing about the insider buys is like, well, no, they can't do that. No way. They definitely can still do that. What's up, guys? Yeah, a lot of I'm not keeping up very well. Thanks, Blue DJ. He says, thanks for all your hard work. Looking forward to the stream after he gets off work. Same with Gavin. Thanks, guys. What's up, Cactus? Yeah, Teddy Holdings going to be pretty exciting. Robert, hey. I'm not on X to answer that question. Gavin says, my girlfriend works for Target Corporate and always complains about the leadership. Hey, there's a clue, right? There's a clue. Gavin says Target is a bit too big. It's not too big. Again, don't even think about it like it's not a cash purchase. Don't even think about GameStop has $10 billion in cash, and after the warrants dilute, that'll be $12 billion. So they can only buy something up to $12 billion. And if they get some debt, maybe they could buy something for more, but not too much more, because that's what they have in cash. It's just two companies merging. It's two companies merging. So if both companies agree to it, then it literally doesn't matter what the market cap is. Like if GameStop was worth $1 billion and Target was worth $100 billion, if Target's leadership agreed to sell to GameStop, then let's say that Target's a $99 billion company and GameStop's a $1 billion. Target could sell to GameStop. What happens? There's a new holding company. It's called Gmerica. Target shareholders, for every one share of Target that they hold, will get 99 shares of Gmerica, because they were 99% of the market cap, 99% of the value for the deal. GameStop shareholders in this hypothetical, for every one share they hold, will get one share. This is assuming they have the same share counts. Not going to try to get too technical, but for every one share they hold, they would have one share of the new company of Gmerica, but it would still be called technically an acquisition. GameStop would be the acquiring company because GameStop's the company that's keeping the leadership. All of Target's executives, bye-bye, here's your severance package. Thanks for selling to us, GameStop. You don't really see a $100 billion company being interested in selling to a $1 billion company. So that's why you would think like, surely that's impossible. But it's not impossible it's not impossible at all. Like the only thing that has to happen is both companies agree to it. Now, if Target was literally 100 times as valuable as GameStop shareholders would be pissed. GameStop shareholders would not be excited about it. And Target shareholders would probably be pissed because they'd be like, we had this great leadership team, and then they're all going to walk away, and now we're stuck with this GameStop leadership team that sucks. Right? They wouldn't be up for that. And GameStop shareholders would be like, man, we used to own 100% of our tiny pie. Now we own 1% of this larger holding company. Like basically GameStop, the retailer, is now effectively worthless in comparison to the holding company we've created. Like we just got essentially diluted 99%. And now we're basically just Target shareholders. Like at that extreme of a dichotomy, it wouldn't make sense. But as soon as you start moving those needles closer together, it starts to make more and more sense. Which we could talk about on the stream. Like why would their leadership be interested in selling? Why would shareholders be interested in selling? Why would shareholders rather have GameStop's leadership than Target's leadership? Right? Why would GameStop want to buy Target? Why would GameStop shareholders be interested in GameStop becoming a holding company similar to Berkshire Hathaway? As long as they both agree, market cap's not even an issue. Oh, someone said my mustache. Oh, thanks, Brick. Oh, I probably already said that. I think I got distracted by your handle. I forgot to read your comment earlier. He said my mustache is looking good. Thanks, dude. What's up, Aaron? What's up, everyone? STH. Dean wants to talk about Best Buy. We'll get there with Best Buy. Someone wants to know, how could GameStop acquire a company that's worth so much more? That's what I just talked about. Why would Target agree to this? That's what we can talk about here in a bit. Some people like eBay. We can talk about that. I don't think eBay makes sense personally. What else? Gin Griffin. Gameshire. Cactus says, refreshing to hear your comments not being in an echo chamber on X, LOL. Bullish than ever, but at times felt doubt. Last few weeks have been validating. Yeah, my thoughts. Sorry for leaving it on Target for so long. Like, my thoughts are my own. I'm not like looking for. I'm not like taking anything from anyone. It doesn't mean I'm the only one that's thought any of my thoughts. Like for all I know, someone else made a video about Target and published it a day before I published mine, and I never saw it. Like, I'm not like taking things from someone else and then presenting them as my own thoughts. Like, my own thoughts are generated from my own dome and research, of course, from like actual company financials, etc. But if I do sometimes present things from other people. Like, I presented the GameStop social media guy tweeted this. I didn't create that tweet or that meme. I'm just like passing it along, sharing it. But my like conjecture, etc., it is my own, and I try as much as possible to be bottoms up rather than just like thinking through metaphor or through analogy, but trying to think kind of like fundamentals and up from there. So I'm glad you like it. Let's see. Yeah, a couple other people want to talk about Best Buy. P Hart says, what you're describing is Target buying GameStop, not GameStop buying Target. That's not true. P Hart. The buying company is the company with the leadership. The selling company is the company that leaves. If a smaller company is buying a bigger company, it's usually called a reverse merger, but you would still be the acquiring company, even if you're smaller. Gavin says, I think you could be right, and Target just had major layoffs. D-Boy says, what do you think of the emoji timeline? I don't know. I mean, I think it's entertaining. I think Roaring Kitty knows things that we don't know, and he doesn't say how he knows what he knows, right? Like, he's been quiet for a long time, so I'm certainly excited to hear him talk about it one day. But for now, it's just fun speculation more than anything. Algo says, would Macy's be equivalent in value and theory? So I do want to talk about Macy's on this stream because there are some reasons why Ryan Cohen could be more interested in Macy's than Target. Like, to me, it's like, I'd put the odds like 2-1, like 70-30. 70% Target, 30% Macy's. That's where I'd put the odds on my personal conviction right now. So like, Macy's is super viable. Most other things would get like an honorary 0.1%. But there are some things that would be more like a 1 to max 5% chance. Like Best Buy, I would give it a 5% chance, which is higher than almost every other company. So I don't want to poo-poo on that idea too much, but I think it's substantially less likely for several reasons. P. Hart says there is no strategic alignment between a merger of Target and GameStop. Exactly. Just like Berkshire Hathaway. What's the strategic alignment between Coca-Cola and railroads? What's the like? It's not about strategic alignment. It's about multiple super valuable companies that are all owned under one equity. It's not integration. So like people talking about Beckett, talking about anything about collectibles, even eBay fits in this category of like, man, this would be so great for GameStop's business. A lot of people talking about Steam, like, wow, this would be so great for GameStop's business. GameStop is making GameStop's primary business totally unrelated to software, totally unrelated to hardware, totally unrelated to collectibles, totally unrelated to power packs. GameStop is making the primary value of their business the asset management business, which Ryan Cohen has publicly said in interviews, like he interviewed whatever last summer with Charles Payne, and confirmed the long-term value of GameStop is going to be primarily driven by the asset management business, the deployment of cash. The other businesses that we acquire will ultimately be more valuable than the entirety of what we do within GameStop's retail business. So anything that you're thinking about from an acquisition target perspective, if it is focused on how does this help GameStop, the retailer, I think that you're thinking about it the wrong way. That's not what Berkshire did. That's not what Ryan Cohen has said that he's going to do. What he has said and what he's continued to allude to is buying a company that will operate separately, but be owned by the same ownership, right? Just like Berkshire. Let's see what else. Oh, Gavin says, thanks for actually reading and responding to the comments. Thanks. Yeah, I don't try to, sometimes I miss some. So sometimes I say like, hey, if you want to make sure I don't miss it, drop a super and I'll actually for sure see it. But I don't intentionally ever miss any. I try to respond. I'm not just trying to farm a couple extra super chats. But if you do ever leave me a thanks any day in the future, just know it all goes to DRS Book GME shares, except for the cut that YouTube takes. So there is that. Someone said, what about Kohl's? I think Kohl's is substantially less like, I would put them at like Best Buy, if everything has to add up to 100, then I would probably say something like 65 Target, 20 Macy's, maybe 70 Target, 20 Macy's, 5% Kohl's, which leaves 5% left, which I would probably give. I think the thing is, I think Kohl's is more likely than Best Buy. Like, I think Kohl's is like something like a 10% chance. Best Buy is something like maybe it's 8% and 2%, and then figure out, and then 70 and 20, something like that. There you go. There's my 100% guesstimate. But I think Kohl's and Best Buy are like much less likely. Kohl's, the reason why is basically it's Macy's but worse. I don't want to talk too much about Kohl's, but it has way more debt. It has twice as many stores as Macy's. Its brand is much worse than Macy's. So the appeal the revenue to market cap is like, it is the most value play of all. So it's still possible, but I just don't think he would rather have Kohl's than Macy's if he wanted to be more of a department store style, personally. Like, everything takes longer. The further down you go in revenue and in profit, the slower this turnaround is going to take, which, by the way, is why GameStop has taken 84 years, right, to turn around, because he went to the low part of the. But here we are. I think, though, Cohen's saying we're not doing that again. We're not going to the absolute bargain barrel again. We are trying to take what we've learned, scale it into something that we can actually make a difference on much more quickly. Let's see what else here. The reason why, one of the big reasons why I think it will be one of these two is because I do think some people think I'm crazy for this, but Michael Burry just said that he thinks it's very possible too. This whole DK butterfly, aka BBBYQ thing, these NOLs would only be able to be used in a store like Target, Macy's, or Kohl's, or Bed Bath & Beyond, but Bed Bath & Beyond doesn't have really stores anymore. NOLs can only be used in a business that's the same type of business. So that's not the only reason. It's actually really not a primary reason at all. These just happen to be the only companies with a revenue as well as the rest of what they're looking for as far as what companies meet the criteria. They just so happen to also be all three more or less department stores. So that worked out pretty well. Anyways, I need to speed up my comment scanning here. So Macy's would be in some ways equivalent to Target, but would take longer than Target, not be as big, etc. Kohl's would be like the equivalent to Macy's, but would take even longer and be even less big. Right? That's basically the difference. And I think Macy's and Kohl's would require continued reinvention of the store, whereas Target's store actually has a nice flow to it. Like they don't need to change the layout of the store. People don't like, but when you walk into a Kohl's, like you do feel a little bit like you're walking into an abandoned retailer, like it's almost kind of echoey. At least the last time I've been in one, which was a couple years ago. Anyways, what else? I don't know if RC still owns Nordstrom, to answer that question. If we did a Target acquisition, stock would be diluted. True. I don't think it has an effect on like the float. Like the stock would be diluted in the sense of you would now, like, I don't think it means the float count is necessarily a higher number of shares or that we're somehow more susceptible to like short sale. I think in a lot of ways you actually like advance the whole short squeeze potential because Target's an S&P 500 company. But what am I saying? But you would be diluted in the sense of like, hey, GameStop overnight is now let's say both, stocks kind of rally into the news. It's a $75 billion company, or let's just call it a $70 billion company. Like GameStop legacy shares. What am I trying to say? If you get 20% of the new company, or if you get 10% or 15%, like what percentage of the holding company shares are awarded to current GME shareholders? What percentage of the holding company shares are awarded to current Target shareholders? Do the math. There's the shares. When it's all said and done, the number on your screen in your account should be higher, right? So you own the same market cap percentage wise that you would have, but basically your GME investment now has significant target risk, right? Like if Ryan Cohen does this, a reverse merger acquisition of Target, well, guess what? There's $100 billion in revenue on the line tied to Target. So Cohen needs to make it work, right? And if it doesn't work, then it's going to look totally, totally foolish. And GameStop shareholders will get screwed. If you're holding GameStop only for or primarily for what Cohen can do within GameStop's retail operation, this is not exciting news for you. On the other side of this, there wouldn't be a pure GameStop. If you want to own GameStop, you have to buy Gmerica. That's the only way, which is like that for every holding company. You might love like Kellogg's. Well, Kellogg's is the holding company name, so that doesn't make the most sense. Let's go to Berkshire. You may love Geico. You can't own shares in Geico. You can only buy shares in Berkshire Hathaway, and then you get some exposure to Geico, but the Geico portion of the Berkshire Hathaway pie is probably just like 30%, 40% of your share value. So there's scale, there's benefit to being a holding company, but there's also downside because anyone that only wants to own video game stores would not want to buy a holding company with tons of different companies. You know what I mean? So you're diluted in that sense. Like one share is no longer 100% tied to the performance of the video game stores. Now one share is 20% tied to the performance of video game stores and 80% tied to the performance of Target stores, but both of them tied to Cohen's leadership of both sides of the coin, if that makes sense. What else are we talking about here? I hope we wake up to a yellow update one day. That would be super fun. Super fun. Let's see. What's your over-under on the acquisition being something no one has thought of yet? I mean, but like, I'd say the odds that it's a company that no one has mentioned is low because there have been hundreds of names, and there's only so many publicly traded companies that are big, So it's it's probably a name that's already been mentioned, but that doesn't tell you that much because people have talked about all sorts of stuff. GameStop parade on Thanksgiving. Let's go. Alfred says Kohl's is only good for Amazon returns. It's true. I think Nordstrom was private owned. RC tried to get the board to allow him to establish a stake, but they wouldn't. They used to be public. He bought a stake. I think he bought and then sold the stake. But yeah, I think you're right, Geppetto. I don't think he owns anything now. Okay, what about the plumbing? Are GME shares recalled before the merger? They don't get recalled, but hypothetically, shorts will have to close. Like it could be a short squeeze triggering event for the GME ticker to go away, but they don't go away and then new share. Like, I mean, they do. Like, it's all mathed out. It's the best way I can put it. One day you will wake up and there will be a new ticker with a new share price, but the dollar value in your account will be what it should be based on the agreement. We don't know the terms of what's the agreed upon acquisition price for Target for GameStop. So Best Buy, real quick. I've said this in the comments, but one, I don't think GameStop wants to cannibalize any of GameStop's sales. I think Best Buy makes more sense if we're thinking about this from an integration perspective, right? How does GameStop's retail business become the most powerful retail business? I do not think that's how GameStop is thinking about this at all. I don't think they want, basically, it's like, I don't think Geico should buy, if Warren Buffett had Berkshire Hathaway and his first company was Geico, I don't think his next company would be State Farm, right? Like, that's not the model. It's not, how do we make this the utopia for all electronics ever, and we will just run the world. Like, it is a diversification. It's a different business that's not going to cannibalize your other business. Like, Warren Buffett's really thinking the opposite of that. Like, how can I buy a business that won't in any way hinder the competitive advantage of my other business? Okay, boom. Coca-Cola, boom. Bank of America, boom. Apple, boom. Geico, boom. Railroads, boom. Aviation services, food company. Like, how unrelated can the businesses be so that they can keep operating without stepping on each other's toes? So that's why I think Best Buy is super unlikely. Also, they're not durable. Like, they've been in decline for many years. I made a video about it on my channel comparing Best Buy to GameStop. I guess I don't really have to show you because you could find it yourself, but I'll go ahead and show you anyways. Where is it? Was it a live stream? Let's see. Michael Burry. Where is it? Maybe I missed it. Milk and Eggs Hardware. Well, maybe I don't know anything. Oh, here it is. GameStop versus Best Buy. I just kind of roast Best Buy for 36 minutes in this video. So if you want to look at it, you can. I don't think GameStop wants to buy Best Buy. I don't think it's quality. I don't think it's durable. It's also not that cheap, right? A 21.5 PE. That is almost double what you're paying for these other retailers we're talking about. So it is a nice chunk of revenue, but also they're not necessarily desperate for cash, right? Their debt to cash is actually pretty decent compared to Target, Macy's, Kohl's that could really use the cash. And Cohen said that one of the things that they bring to the table to make is that they have the capital. We've got the capital. So if the company they're buying are the capital, then they're not going to be interested in selling, right? Strategic part of the equation in that case. So there's that for Best Buy. Hope you're happy. All you people that want to talk about Best Buy. What else we got going on? It would be nice if the company didn't have exposure to tariff risks. Yeah, totally. Robert wants to talk about old movie theater stock, popcorn stock, AMC. I actually did, so I don't think they're going to. I've said this several times. The balance sheet's horrible. The durability is not there, but the revenue's still okay. I think the only reason he would do that, and I don't think AMC will sell, honestly, because I think they're just that corrupt from a leadership perspective. The only reason he would do that is right here. $5.3 billion worth in NOLs. If he wanted, I don't think this is what he's trying to do. Okay. But if he was interested, he would buy $5.3 billion worth in NOLs for pennies on the dollar. It would take forever because he'd have to close so many of these theaters, and he would use these NOLs for Dave & Buster's. He would also buy Dave & Buster's. He would steal AMC's short interest and tax advantages towards Dave & Buster's. The reason I'm pairing those together is because, again, NOLs have to be used in the same industries. You can't use NOLs from a car business and apply it to your video game store that you just bought. I think maybe Dave & Buster's is similar enough from an entertainment industry that you could use AMC's NOLs with Dave & Buster's, but your total revenue, even if you kept all of AMC's revenue, which you wouldn't, you would be slashing this because you would be closing a ton of their stores because you don't believe in the durability of the theater industry. But even if you kept $5 billion worth in revenue, Dave & Buster's right now is only at $2 billion revenue. So altogether, you're still only at $7 billion, which is just a fraction of what we're talking about with Macy's. You know what I mean? So, but I did have that thought in the comments on this video, and I was like, that was actually kind of a deal. But I don't really even like talking about it because I'm not trying to shill for AMC. I don't own a penny in AMC. That's for sure. Someone wants a TLDR. I don't know if I can give you a TLDR for what I've said so far. We're talking about Target and Macy's. You know, like, I don't know. That's my TLDR. Oh, okay. So Burry's. Yeah, so Burry. Okay, so here's my question for you guys. What do I get if I'm right? You know, like Michael Burry has spewed off at least 10 companies total between his posts and the long article of companies that he thinks he wants GameStop to buy. I'm like, look, I'm narrowing down to 2. Okay, these are really my 2, but I do think Target's more likely. And I'm just saying, what happens if I'm right? You know, do I get to wear a crown on my next YouTube video? Like, I don't know. Nothing really happens. The big picture doesn't matter if this specific prediction is right or not. But I'm just saying, I think it'd be kind of cool. But Michael Burry, I covered his article in this live stream right here, Long GME. Something that became very clear to me is that Michael Burry is super bearish on brick and mortar retail. And I think that colors his opinions dramatically. He's very bearish on GameStop's retail business. And his hope for GameStop is to use their cash to get out of brick and mortar retail. It's like he's pleading with Ryan Cohen, please don't go up against Amazon again. I know you succeeded with Chewy. I know you're succeeding with GameStop, but there's no way you can keep doing this. Okay? Stop this. Just go buy a cybersecurity company. Go buy an e-commerce only. Go buy a storage unit somewhere. Like, just do anything other than brick and mortar retail, please, because there's no way brick and mortar retail is going to succeed. That's basically Michael Burry's take, and it's just not Ryan Cohen's take. Jet Geek, what's up? Let's go, Jet Geek. Jet Geek made 378% plus on Target weeklies. Bro, you gangster. You gangster. Did my video influence that decision? Did you see my video on February 2nd with Target around 105 and leg into some 112 weeklies that just 5x'd for you? Hey, thank you for the super. He says, heck yes, it did. I am a DJ. Let's go, man. Let's go. Thanks for the super. Hopefully you made more than $5. So you still got some profit out of that. Very, very exciting. So just so y'all know, personally, I didn't buy any Target, but I am a financial advisor. I manage money for clients. some of my clients, right? It doesn't necessarily 8K profit. Let's go, Jet Geek. And then he says, shh, don't tell nobody. Um, for my clients who are not 100% in GME because they don't have the same risk tolerance as me, etc. I did make space for a Target and a Macy's position within their portfolios following my video. So I posted the video first. So I gave everyone a fair shake. But I did think, I am actually convinced enough that I might be right. GameStop's acquiring this company, one of these companies, even if GameStop isn't, a super strong balance sheet and the super low valuation, they still are relatively attractive investment opportunities now. Like they are undervalued. And I thought, and I wouldn't have come to those names if it weren't for all of this GameStop discussion. So I did say, okay, for my clients, let me go ahead and give you a little bit of Target exposure, a little bit of Macy's exposure. But I didn't leg into calls. So you got me beat there, Jet Geek. Love it. Patrick says, what's your hunch about timing of merger announcement? I would guess it would line. I mean, this is kind of a hope more than a guess, probably. But I would think sometime around either or after or before their earnings on March 20 something. It hasn't been announced yet. Might be 23rd. I would think like based on Cohen, like I'm hopeful. I would be a little disappointed if they don't say anything. They just post their 10Q. They don't hold an earnings call. They give no update at all. In light of how bold it doesn't mean it's not really that disappointing because he's fixing to. He's working on it, but I would be shocked if we get to the June shareholder meeting and nothing's been announced. I think the odds of that to me are super low. I think it's very likely that before June, an announcement has been made. And I think it's more likely that it's before April 1st because we're voting on this Cohen, or maybe when does the vote happen for Cohen's compensation plan? I know they haven't actually announced the date yet. I'm pretty sure. When does the vote happen? March or April? Okay, so I think that to me is an interesting data point. I think he might just be pumping this stock with news, but not actually delivering the announcement until after this approval happens. But he might be thinking about it the other way, where he's saying, let me deliver on the acquisition and then seal the deal for the approval. I think he might just want to like get the shareholders excited that he has a plan. We're going up. It's going to be super big. I'm not going to tell you what it is yet, though. Go ahead and sign this contract for me to make $35 billion. And then after you sign that, then I'll go ahead and I'll tell you what it is. Right. I think this vote might happen first, would be my guess. But I'm hopeful that they would announce first. But I don't know. If I'm Ryan Cohen, I just want to make sure I get that vote. So whatever he thinks is more likely to ensure that happens is probably what he would do. So if the stock's lagging and this news dies down and we're back at, 20 a month from now and we're leading up to earnings and let's say Q4 is kind of soft and we're just chilling at 20. I think If that's the way the stock is performing, it makes me think that he would go ahead and make the merger announcement before the vote. But if the stock is still rallying, even if he hasn't announced a merger, I think he might just say, let's get the vote out of the way, and go from there. So we'll see. I do think the deal is essentially already done. SC says Q4 ain't going to be soft. LMAO. It's relative to expectations. So yeah, everyone knows Q4 is a bigger quarter. It's the biggest quarter, but that's priced in, right? Everyone knows that. The question is, how many Switch 2s did they sell? The question is, do they tell us Power Packs numbers yet or not? The question is, how do investors feel about the Bitcoin loss, right? Which is going to be what? About a $163 million loss, So like on a net income basis, that doesn't affect operating income. But on a net income basis, Q4 is going to be like right at break even, probably. Like it's not, but that doesn't matter from a valuation as far as like when you think about GameStop's PE. Net income is not the E. The E is operating income. So GameStop will still be able to report a strong operating income quarter, but just because it's strong doesn't mean it's as strong as people want it to be. And even if it is as strong as people want it to be, it doesn't mean that people will be happy for having to wait another quarter before we see Power Packs numbers disclosed, or that people would be happy about a Bitcoin loss. And particularly, what do they do with the Bitcoin, right? Like, do they still have it on the balance sheet? Some people are going to be pissed that they're still holding Bitcoin. Or have they sold the Bitcoin? Some people are going to be pissed that they just turned 550 million into 300 million or whatever. And why would you cut your losses? Why wouldn't you buy more and go up from there, We've got a super Eric. Hey, welcome back, Eric. Eric was super active on some of my live streams this weekend. Mergers and acquisitions are extremely quick, no? Within a few days. Why cancel Monday interview with Payne? Very out of character if no merger soon. I agree, Eric. And this is the other side of the coin that would make me think maybe the announcement's coming this month, or at least within the next 6 weeks. If it could be in 1 or 2 weeks, I mean, that would be epic. But I would not recommend you to YOLO into calls on hoping that the announcement comes through by blank day. But I don't think you post those articles. Like, I don't think you interview with Wall Street Journal. I don't think you interview with CNBC if it's still 4 months away. It could be, though. That's just like the latest I can conceive, and I'm trying to bear myself for that potential. But I do think it's a very good chance that we do have news within the next 6 weeks, and maybe even sooner. Right? I don't think it would be this week. Like, I don't think it's literally a few days away. That would also feel like, why would you wait until a few days before it's literally finalized? But it's possible. Like, it is possible. It can happen extremely quick, particularly with publicly traded companies, right? We already know the valuation. Let's just agree on a ticker name. Let's agree on what's the sale price. What is target cap? What is Target's market cap weight need to be? Is 55 fine? Does it have to be, or is it 60? Is 50 fine? Will Target take a little bit of a discount on the percent equity of Gmerica in light of the fact that GameStop's leadership is the one that's going to take it from there? And would Target say, I'm actually happy to get 70% of the new firm, or 20 80% of the new firm rather than the 85% that maybe I should feel entitled to just based purely on my market cap. But maybe I'll give a little bit of that equity percentage away, believing that the Gmerica holding company is greater than the sum of its parts. I'm very interested to see what the terms end up being for the deal. It's not bearish on GameStop shares unless you, to answer your question, Daniel, unless you think that Ryan Cohen cannot turn Target around. But think about this. Think about this. GameStop right now is an $11.5 billion company. They are on pace to do something like 3.5 billion in sales, right? Maybe closer to 4. Let's call it 4 billion for the full year if you want to be aggressive. GameStop does 4 billion in total year sales. Their operating income is on pace to what? If everything goes well, their trailing 12-month operating income, by the time they report in December, will be at something like 600 million. So if GameStop executes super well, then in 10 months, their trailing 12-month operating income might be as large as Macy's is right now, which is some nice upside. Don't get me wrong. I mean, I've been covering the stock because it's some nice upside, because right now they are sitting at 234. So that is it's more than a doubling, approaching a tripling of trailing 12-month operating income, which gives you some nice upside on the stock. But from a revenue perspective, you're talking about 4 billion in revenue versus Target that's literally doing over 100 billion in revenue. But Target's market cap is 54. So what is like think about how do I do this? Target, GME. The bottom line is Gmerica. If you were to think about Target's revenue is a 105 billion out of 109. They have 96% of the revenue. GameStop has 4 billion out of the combined 109 million. 4% of the revenue. But if they're both just treated at current market cap, you've got a 12 billion and a 55 billion. $55 billion market cap divided by the combined $67 billion holding company is only 82%, whereas GameStop's 12 billion divided by the 67 combined is 18%. So the combined holding company, GameStop shareholders are getting a 6x premium on GameStop's revenue compared to Target. Target's 96% of the revenue, but only 80% of the company from a equity perspective. So there is, if you don't think Ryan Cohen can turn Target around, or Macy's or whatever else for that matter, equity percentage, then of course you wouldn't be excited about this. But if you think that GME converting into Gmerica could force legacy GameStop shorts to close, then you would be excited about this. And if you think that he can turn Target around, then you would be excited about this. because you get Target at a discount. You get 30 times the revenue at a discount. It would be pretty incredible. Like from GameStop's perspective, you get it's 4 billion revenue to 105 billion revenue. Like, that's incredible. If you do or don't think DK Butterfly is involved, don't even worry about it. Like, who cares? It's not even, that's icing on the cake if it is. Although pretty tasty icing for me, because I did bring some BBYQ shares to the grave. So, but I'm not like trying to, like, I could be wrong about that. I've been wrong about plenty of things. I've been wrong about what my hobbies are. You know, like, oh, turns out I don't like that anymore, you know? Ignite Fire says, I'm going to guess Ryan isn't going to take the risk of his payment plan being denied. Why would he line up a deal and then take the risk of not being paid? Yeah, I mean, the bigger, that's exactly the point. And a couple of thoughts. One, shareholders have to approve it. So that's what I was talking about earlier, is like, it is, the risk is that he doesn't get, but if he's approved, I think there's little risk that he will not accomplish these goals. He has a big fat $ incentive to accomplish these goals, you know. But Target profits right now 3.6 billion. So again, even on a profitability perspective, let's move equity over here. Let's look at operating income. Target's operating income would be about 3.6 billion. GameStop's right now is more like 260. So you're looking at 3.6, and what's the 0.26 on top of that? 3.86. On an operating income perspective, Target is 93% of the operating income. And yet, again, GameStop shareholders, literally just because GameStop raised cash, because of the short interest that Ryan Cohen capitalized on and has been super frugal with, like, GameStop's balance sheet management is the reason that GameStop has the opportunity to turn a tiny fraction, right, 6% of the income, into 18% of the holding company, 3% of the revenue into 18% of the holding company. Like, so anyways, whether he announces the deal before or after, I don't know, but the deal needs to get the market cap to $100 billion, first of all. Second of all, he needs $10 billion in basically operating income, or EBITDA, which is a little easier to get to income. Well, if he buys a company that's already doing 3.6 billion per year, guess what? He's going to hit the EBITDA hurdle in 3 years or less. Probably more like 2 years, because he's going to improve the profitability, and we're also adding in GameStop's profitability plus power packs, right? The market cap, if tomorrow GameStop's market cap is 70 billion, well, guess what? He's going to get paid, right? I'm sure they'll adjust the market cap. Surely they'll adjust it, not to just basically award him the free 50 billion via acquisition. but I'm not positive. Like, he might get full credit for the market cap that he acquires just as much as the market cap that he accrues over time within GameStop's retail improvement. What else are we talking about? They're new shares, but they've been approved as far as his comp deal. So my valuation tab, I kind of show here's the current share count. Then here's some dilutions that are coming. Here's where the comp plan shares come into play. GameStop has approved the creation of up to 1 billion shares. So those shares are approved, but they don't exist yet. Right now, this is what exists. To answer that question, Eric says, in my limited knowledge of M&A, even big deals are negotiated and finalized with teams of lawyers very quickly because word can get out. They can break down a deal. It's true. I mean, they could announce a deal next week. Or, I mean, it could be Friday. They could. They totally could. I'm super hopeful. I'm just trying not to get my hopes too high, but you're right. Like, they totally could. Because the deal has to agree on the terms. The terms are super tied to the market cap. So if people get wind of a deal and now Target's already up 10% since I dropped my video. Sorry, Ryan, if I've complicated your life at all. I apologize, but I believe in you. Okay. That's my word to Ryan Cohen. Target's already up 10%. So, like, if Target starts going on a rally and now they're up 20%, 30%, well, they're probably up because people are speculating they're merging with GameStop. But now, shareholders are going to want their Target shareholders are going to want their equity percentage to reflect the new market cap of Target. And if Target's 20% higher than it is now and GameStop's not, let's say GameStop's falls to 20 a share and Target goes up to 130 a share, well, now GameStop can't, this changes dramatically based on that movement. So Eric's right. Like, once we make a deal, like, let's sign it and let's move on. You know what I mean? So it could be super soon. It totally could be. Hazel says, thank you. You've been very informative. Thanks, Hazel. Dan likes Wayfair. No stores and not undervalued. That's for sure. I looked at this on one of my live streams. Michael Burry does. Oh, not Waystar. Are you crazy? What an imposter. How do you call a $12 billion company undervalued when it's bleeding cash? It's got a negative 40 PE? How? They're bleeding money even in Q4? I don't love it. The other thing is at a high level. So to me, this is overvalued substantially. 13 billion in revenue for no profit at all is stinky sauce. But the other thing is Cohen started Chewy with dog food. Like, Chewy and GameStop are both high touch, high frequency customer businesses that you can develop a customer relationship through. Wayfair, it's like, okay, I just bought a chest. See you in 6 years if I need anything. You know, like, it's just not a lot of high churn, high touch, which I think he considers part of his edge. So that's one reason why I don't think he's going Wayfair, personally. Target, Machuca says, Target serves the middle class, and the middle class has steadily disappeared. Just look at Walmart hitting 1 trillion market cap. Yeah, so Target is a discount store. Target is a discount store, a discount retailer. Every other discount retailer is valued at 3 times what Target's valued on a PE basis, despite Target having more revenue than almost all of them. So from a Five Below, from a Dollar General, from a Dollar Tree, from a Walmart, like the discount buyer from even a TJ Maxx, even a Ross. Like these aren't all like low income discount stores. A lot like this is like TJ Maxx, middle class, Costco, right? Like it's not the super wealthy that are buying from Costco. It's people that are broke that want to save dollars, right? Target is a discount retailer. They're the only one that is undervalued, that's valued this low or even close to this low. But yeah, people still got to spend money, but people spend money there. Like people are broke, comma, and Target's doing still 105 billion in revenue. You know what I mean? So imagine if people aren't as broke one day, right? What if the economy actually does turn around a little bit? Like holy smokes. If you improve Target's revenue by 20%, right? You've just made $20 billion. If you get Macy's to improve by 20 billion, you need to double their revenue, right? If you improve Target's profit margins by 10%, right? You've just made billions of dollars. If you improve Macy's by 10%, you're hoping that you make a billion. You know, like the scale is just so different. The scale is just super, super different. I got to go here pretty soon, but I want to talk about why would Target sell? And I did not really make it to the comments, but on this video, but thank you all for the comments. I responded to them though. If anyone's interested in the comments, you can just read the comments yourself and hear what I have to say about it. It's not going to make it into this live stream, unfortunately. But I will say, as I said in the comments several times, as it relates to eBay, 10% of the revenue of Target, right? It's only 10 billion in revenue. 10% of the revenue for double the PE for a company that does not need cash at all and is already very efficient. It just does to me, and it's collectibles, right? Same thing as Best Buy. It's a cool idea if you're trying to integrate within GameStop, the retailer. It's not a good idea if you're trying to be Berkshire Hathaway with different companies that don't run into each other. eBay and GameStop would literally run right on top of each other. It'd be an integration in the collectible space and in the PSA partnership space, in the resale space. It would be a huge bet on GameStop, the retailer. But Ryan Cohen's not that super bullish on GameStop, the retailer. You know, like he doesn't want all of his eggs in the GameStop retailer basket. He wants to be a holding company with several companies that he can iterate on and improve on through efficiency and customer delight over time. He doesn't want to be one massive company with one thing that he does, in my opinion. Dan says we already have brick and mortar. Yeah, I mean, the reality is people just don't go to every store for the same reason. And the articles both said like it's going to be retail. So I think he does find a lot of deep value in that space. And I think he has a lot of expertise to outperform in that space. And yeah, there is a tiny bit of overlap. Like Target does have the electronics section, right? So there is a tiny bit of overlap. Whereas a Macy's doesn't really sell electronics. So if he doesn't like the fact that, oh, but Target does sell a couple of video games that would compete against GameStop's market share, then maybe that's why he would go Macy's. Could be. But like you're just not going to Macy's and Whole Foods and you're like, oh shoot. Like you don't go to Whole Foods and you're like, oh dang, I was gonna go to Macy's today, but I don't have to because I've already been to Whole Foods. It's like the fact that they're both in buildings it's almost like saying he's not going to get two different companies because they both have office buildings. It's like, oh, sorry, we already got a corporate office. It's like, yeah, but the company is so different. And yeah, he did scale Chewy without brick and mortar, but I think his vision moving forward is omni-channel, and it was Chewy's vision. Like, that's the person that bought them, right? PetSmart, omni-channel. Amazon bought Whole Foods to be omni-channel. He closed a ton of GameStop stores and improved their website to be more omni-channel. He's not going to close every store, but he likes to touch on both sides, in my opinion. Okay, so why would Target sell? That's the last thing I want to talk about. Target, if they sell, they still get every dollar of their equity plus whatever premium GameStop pays. So, like, why would you sell if you think that basically if you think Ryan Cohen is a better leader than you are? I mean, essentially. And if you think GameStop has the cash, has the meme retail hype, the investor support, right? The short interest. If you think that by selling to GameStop, by allowing Ryan Cohen to lead your company, that your shares will be worth a lot more than if you didn't. That's why you would sell. If you think that because of GameStop's positioning and because of Ryan Cohen's clout and because of Ryan Cohen's wealth and because of Ryan Cohen's executive and operational leadership efficiencies, that he can make you wealthier. And by the way, you as the executive get paid. You get paid if you're a Target executive. You get paid some premium to the current market cap, and you get paid severance. So you get paid your salary for some future amount of time, and you don't have to work anymore, right? You get to go home. Okay, so you're telling me you're going to pay me more than my market cap, which, by the way, my market cap's already a little bit inflated because people are excited that you're going to buy me, right? This is when this article came out about Target preparing for acquisition. They're up 25% since then. So you're already paying me 25% over where I should be, and you're going to pay me some percent above that. Plus, you're going to pay me for a couple extra years. Plus, I don't have to deal with this anymore. Like, I'm good. See you later. Now, as the executive, I just need to convince shareholders that this is also in their best interest. Shareholders, guess what? You're getting a premium, right? You're going to get the equivalent of a $60 billion market cap instead of a 55 in the new Gmerica publicly traded company. So your shares don't go away. You're not just getting a little bit of cash buyout. You're getting 4 for every 5 shares in Gmerica. And your shares from day one are going to be worth way more. Here's why. Ryan Cohen is awesome. He's proof of concept. He's going to take this way further than we can. By the way, shareholders, you don't like us anyways. We're horrible leaders, right? Ryan Cohen's awesome. We're lazy and we stink. Our track record is pretty bad. You know what you've gone through over the past 5 years? Boost tank. Instead of having more boost tank, guess what? You could squeeze to a 10x in the next month. And you know who's going to take you there? GameStop legacy short interest and GameStop bold vision forward leadership. He's the man with the plan. He's the man with the investor base. He's the man with the executive leadership team that's much better than our leadership team. And you are getting every dollar that your shares are worth you are getting plus a premium, and you have all of that into the upside, right? So if this becomes, this 55 plus 12, right? If this $67 billion company combined one day is worth $500 billion, guess what? 4 of those 500 billion are yours from the target side, right? One of the 100 billion is one of the 500 is GameStop's. Now, probably now that I'm selling this to target shareholders, you guys are like, wait, now I'm pissed. Am I getting screwed as a GameStop shareholder? Well, no, because guess what? Your 12 billion just turned into 100 billion, right? Your of market cap. Your 4 billion in revenue just turned into 110 billion in revenue, right? The upside for you, if the reason you're in GameStop is because of the fundamental long-term outperformance tied to Ryan Cohen's leadership, then he's getting a way bigger field to play on. All right, he's getting a way bigger pie to work with. And so anything that he can do, if you think he can do what he's done with GameStop again, then the upside is literally something like 15 to 40 times higher. And all you have to pay is what? 60 billion, but you don't even have to pay it in cash, right? All this cash would still be in the bank. You're not losing your cash. You still have your cash security. But what you have to pay is dilution, right? You don't have the weight of the future. But what are you valuing target shares at? Even if you're valuing them as a $60 billion company, well, guess what? Literally just over a year ago, they were a time and a half that, and so you're still getting Target for substantially less than what people were paying 5 years ago for the company. You know what I mean? So you get all the revenue capture for pennies on the dollar compared to where it's traded historically, and your ability to move the needle, to make revenue, to make profit, and then, right, to move on to the next one. It's just the beginning. It's super exciting. But when you move on to the next one, you're not going to get diluted, right, by 80%. Your 100% of GameStop isn't going to turn into 20% of Gmerica, because now Gmerica is already a $200+ billion company. So when Gmerica wants to scoop up whatever other store you think it should scoop up, maybe it ends up getting Macy's also. Well, now Macy's, let's say they struggle a little bit more and they're down to a $4 billion company. Guess what? We're a $200 billion company. We're going to go ahead and buy your $4 billion company. And we just captured another 20 billion in revenue, right? You keep rolling it forward, and the future dilutive effects of merging with acquiring other public equities is a fraction of what this one would do. This one would be a huge bet on Target and on Cohen's leadership of Target. It would be a huge bet. And if you don't think he could pull it off, well, obviously we don't know if this is announced, and let's say shares rally a little bit, but deep down you don't think he can pull it off, then when it rallies, you should sell. If you think he can pull it off, then you should be like pumped, because the upside just got way higher fundamentally. And all the stuff GameStop is doing, right? All like is still it's still moving the needle, right? It's still adding value to Gmerica, but the total upside just becomes so much higher. Okay. Ignite Fire said, "Thank you, Jeremy. You're crushing it." Ignite Fire dance. I appreciate that. Let's see what else. What else before I get out of here? No, he would not already be buying shares unless Target does not want to sell and he is doing a hostile takeover, buying shares with cash. That's not the indication that we have. If that were the case, though, yes, he would be buying shares with cash to try to hostile take over Target. But I don't think he's going to do that. If they're just selling with agreement, they shake on it. Here's the new ticker. Here's the value awarded to GameStop shareholders. Here's the value awarded to Target shareholders. Boom, overnight. Now it's Gmerica. Or whatever. I don't know what they would name it. They might even keep the GME ticker. What else? What else? What else? A couple other random names. I've already talked about Best Buy, so just listen to this again or watch my Best Buy video. Beckett Cat, what's up, bro? He said, I actually expect to buy it. Will not affect how GameStop trades for a bit. We could go up on news, crash for a period of accumulation, then see the benefits of being in the S&P 500. Yeah, totally. I mean, a lot of times buy the rumor, sell the news is the right play on trading. So I agree with Beckett's speculation there. The thing with Target is the S&P 500. Like if GameStop announces, like if the news is the name is Target, then everyone knows what that means as it relates to GME and the demand for shares and the potential exposure of short interest, because Gmerica would be automatically an S&P 500 company. I think automatically. I guess the one stipulation is, what if it's not automatic? What if they have to be reapproved? If Target's automatically kicked out of the S&P and then the Together holding needs to be approved into the S&P. I don't know enough about the plumbing of that to say for sure. Either way, though, I do think there's a chance that the stock does rally on the news of that inevitability, because it would be inevitable either way. Jack Geek says, how does Teddy Corp come into this? Yeah, I mean, that could just be the name. Like that could be the holding company could be called Teddy, which is, I don't know, that's probably my best guess what they would name the holding company. But it's just a shell. Teddy Holdings is just a shell company. So it's whatever. It's whatever. Okay, I got to go. Wifey's asking if I'm ready to go because we got to eat dinner with the fam and all of that stuff. So I appreciate you guys. Thank you guys for being here. I'm not going to keep talking about Target and Macy's and acquisition targets. I'm going to try to keep focusing on the GameStop fundamentals we know now. Unless if we have new news, of course, I'll cover new news. But as you all know, like I can totally be wrong about Target or Macy's. I'm not trying to say I'm definitely right. I'm trying to present my case why I think I'm right. Ultimately, if I'm wrong, hopefully we all still learned something through this exercise. Ultimately, if I'm right, it doesn't make me smarter or dumber, right? It's not like, although one person said I'll be some type of legend on Supersonic if I'm right. I don't think that's true. I think like Reddit and YouTube have a rivalry, so I think I will be banned. I think I would be a banned name on Supersonic if I'm right about this. And be like, oh, auto flag. Did you say Jeremy or did you say Budget for Life? Sorry, this subreddit's only for GameStop. Anyways, what am I trying to say? Oh, wrapping up. I could be right or wrong. I don't know. Like, I'm not an insider for GameStop. I've never talked to Ryan Cohen. I've never even seen the man. I don't know for sure that he's a real person. Okay, that's how much I know. But I think it makes a lot of sense. I would be super excited if it happened. Target's not too big to make it happen. It follows in so many ways with what Ryan Cohen has said in the articles. The question is really, would Target agree to it? And I think if they want to get paid well and they think Ryan's probably the right guy, like basically, would Target executives want to hire Ryan Cohen? Like they just did this CEO transition promoting the COO. If Ryan Cohen was public and like, hey, I'm leaving GameStop, I'm not going to run GameStop anymore, I'm open for hire, would anyone like me to come lead their business? Do you think that Target would be interested in hiring Ryan Cohen as their CEO based on Ryan Cohen's resume? If you think that they would, which I think they would, then that is the same reason why Target would sell to GameStop, to be acquired by GameStop, to merge with GameStop, because that's the way that you're going to get Ryan Cohen to lead your company, because he's not leaving GameStop, right? He's got too much on the line with GameStop. And so it's a win-win if you think he would be the right guy for the job, which I think he would be. Super exciting. Excited to find out. If I end up being right, that would be pretty cool, because I'm not really a predictor of the future. I'm mostly an analyzer of the present, you know? And as far as the future goes, I like to think about big picture trends and fundamental over or undervaluation, right? But I'm not really trying to predict exact timing. I'm not a day trader by any means, but it would be fun if I was right about this prediction. That'd be pretty cool. Okay, that's all I got for y'all today. Thanks for being here. I will see you. Thanks also for the couple supers. I do appreciate you guys. See you in the next one.